We learned earlier this week that Canada and the U.S., after some tribulations, had finally agreed to the tripartite trade deal that they're now calling USMCA. From a constructive viewpoint, it's not really all that different than NAFTA. It's a certain amount of it is rebranding. There are some specific changes that I'm not really going to get into the politics of, but they definitely affect certain marketplaces such as automobiles and things like that. And it doesn't resolve some of the metals tariffs fights that have been going on, but it is very constructive in one sense. I think there were certain worries, specifically in Canada, about bilateral deals as opposed to replacing the trilateral deal that we have in North America. Part of that is the U.S. is typically negotiating from a stronger point than other countries, and we have a president who I think prefers bilateral deals certainly to multilateral deals. So there was a lot of worry that this could really get messy if the deadline wasn't met. But the deal with Mexico was signed a little while ago, and now the deal with Canada is signed, and all three remain under the same framework. There are still some I's to be dotted and some T's to be crossed on as far as implementing it as a valid treaty. But basically, that removes North America from the trade worries list. And I think that's the most important thing you can take away. Basically, the markets really have been, in some ways, held back, particularly earlier in the year, by a lot of the trade talk. Basically, markets tend to be dominated by multinational companies. Those multinational companies really benefit from free and fair trade. It's not clear that some of these market leaders were being unfairly impinged upon in many ways, but certainly their success says something of itself. But anything that raises the cost of doing business, anything that throws sand in the gears of international trade, is worrisome to a market that's dominated by big cap multinational stocks. And so we basically now can take North America out of the trade problems pile. The rhetoric has been calming down between the U.S. and Europe. I don't know that it's all gone away. And with each incremental calming of those trade fears in a different region, the market's got a little room to continue to move higher. The U.S.-China issue still is far from being resolved, and I think that actually has the potential to get messier before it gets cleaner. But in the short term, you'll see that this is helpful in the sense that you removed a barrier. I think from a Canadian point of view, it's actually wonderful because I think there were some genuine worries that this was not going to get done in a way that would not harm Canada more than the previous deal had. So we started to see an improvement in the Canadian dollar versus the U.S. dollar. The Canadian markets, while in many cases dominated, the banks have a very large weighting in the major Canadian indices, but there's still this big sector that mines natural resources, that sells goods around the world. Those will benefit. And especially as as the stock prices go up in Canada, if they do, U.S. holders can benefit two ways if you buy Canadian shares, because you benefit from a stronger Canadian dollar as long as it doesn't get too strong. And that could provide a good backdrop for people to be looking for opportunities north of the border. I think that seemed a bit safer than they did a couple of weeks ago. We'll see whether that persists, but right now I just see a better tone internationally toward Canada. And so we'll see where the market takes us. Right now, I think anything that diminishes the trade temperature is good. And I think we just improve that, at least from a North American viewpoint, and we'll see where we go from here.